Hi viewers, it's Patrick here from Have a Go Business Systems Limited, small business improvement professionals. Thank you for joining us. As we do this video, we're halfway through the year 2026. And this video is supposed to help you review or try and understand how you have performed this year in the 6 months. It's now just into July 2026. It's to help you review how you have performed. We've done a couple of videos on performance to date, half-year performance. We did some videos on sales, also on your payables. Today, we're doing a video on your gross profit performance, how your gross profit has performed in the 6 months of 2026, and to prepare you for managing the rest of the year in a way that's advantageous to you and your business. That is gross profit management for the rest of 2026. So you come out strong, as we hope you had hoped to be. You come out stronger, if maybe even better than you thought you would achieve.
Yes.
So increasing sales alone may not cut it, may not be the only answer that you need. Yes, you do want to increase sales, but you also want to know that you are increasing your gross profit. It's a healthy gross profit that's coming out at the end of the sales that you do. So today we want to look at, hopefully you had some plans at the beginning of the year for achieving a certain level of gross profit. But even if not, at least this video will be helpful to help you along. Maybe you hadn't developed a plan that was written or documented, but at least you had some thoughts. I hope you had some thoughts about how much profit you want to make during 2026. But let me start off with an example. A small business owner doing sales, actually tuk-tuk sales of spare parts for tuk-tuks, wanted to achieve a certain level of gross profit, but they had a plan. Okay, it was a very good, very clear plan in mind. Every month, what she was targeting to achieve. But what she realized was that all she had was estimates of how much gross profit she has made. They were just figures, estimates of how much profit she has achieved. So what did she do? She embarked on getting a system. In fact, that was our system, BORESHABiZ, or at the end of the week, or even more importantly, they were focused on the end of the month. So from the time that she got BORESHABiZ, it's an app that tracks not only the gross profit margin, but so much more data about your business. So this is an app that helps the business owner to get this information at their fingertips. So what did she do? There was no more guessing. It was clear how much she's made at the end of the month. It was clear also what is the gross profit growing compared to the month before. And she could even now find out which are the products, which are the spares, which are generating more of this gross profit, which ones are losing. So it's not every product that you're selling that gets you the same amount of gross profit. So she was able to see for each product what is the gross margin. She was able to see how much could she make out of this spare part, especially if it is a fast moving one or if it is a slow moving one, whichever one it is. She was able to have that data to make a decision quite quickly. But the first problem was solved. How much gross profit has she made in a month? That information was very clear and available in the business. So it was possible to even build on it, to identify what decisions she needs to make so that she can grow that gross profit. So end of month, as she said, became a lot easier, a lot more comfortable. because they simply just had to look at the data on the system. The system data told the story. So she was able now to go to the next step, that is to identify why gross profit has turned out that way. What could she do? What are the root causes of what she was seeing? And she was able to deal with each issue, each root cause, and expect a better performance the next month and the next month.
Yes, and there's someone who has mentioned here, they've written a comment, I can't understand. So I would like to ask Ruth, what exactly uh, is the area that you're not understanding? For you who are students right now, we are talking about review of gross profit. So we are reviewing our gross profit plan in the middle of the year so that we can plan and adjust for the rest of the year, that is 6 months that we have to work better in our businesses. So share more details and then we'll give you the advice you need. Yes.
But I'll just clarify
Yes.
that the gross profit,
Mm-hmm.
you see, in your business, you're selling some stock, some items, either a service or a physical stock item,
Yes.
an inventory item. The price at which you sell at any one of those services or products,
Mm-hmm.
if you deduct the cost of that product, the buying price of that product, you have gross profit. So gross profit is the sale prices. It could be all the sales in that month minus the cost of the goods that you sold during that month. The quickest way to know it is to make sure that for every stock item that you're bringing into your business or any service that you generate or you do, you serve that from the selling price. So that is what gives you the gross profit. It is also sometimes called a gross margin, but a gross margin is actually a percentage of the difference, a percentage of the difference dependent on the selling price. That is the gross profit margin. It's also called gross margin. But here we're talking about gross profit, which is actually money terms, financial terms. How much did you make in terms of the difference between the selling price or the sales that you did? If you give a discount, also deduct that discount or take into account that you sold at a discount. So the selling price less any discount minus the cost of the goods that you sold or the services that you sold gives you the gross profit.
Thank you for that explanation, Patrick. So, Ruth, I hope if that is one of the things that you are not able to understand, now you can understand even much better. And we have a question. How well do you know your business gross profit? How well do you know your business gross profit? Is it you know it every month? Do you estimate it? Do you only know your sales or you do not know it? You can share with us your answer in the chat session, and we are going to appreciate. Engage with us as we engage with you. So, to our next part, we are going to cover importance of the media review of gross profit, and Patrick is going to give us a flow. Yes.
At the end of the day, if you determine or calculate your gross profit now, when you're halfway through the year, you're giving yourself enough time to find out how it went and what you could do. You have enough time to adjust or to deal with the situation, the outcome, before the end of the year. So the most important reason why you are reviewing at the middle of the year is so that you can prepare yourself, you can know what to do between now and the end of the year. You have time. You're not rushing at the end of the year to try and find out how you performed and so on. You already know from halfway through. Of course, the first half gives you enough data to tell you how you performed. So you're doing it at the middle of the year so that you prepare yourself for the decisions you must take that by the end of the year, you are back on track or you are exceeding what you had hoped for, because you saw you could exceed. By halfway through the year, you saw you could exceed your targets, but the gross profit may not have increased, it could have declined. So when you review your performance of gross profit at the middle of the year, you want to find out if sales are increasing, was gross profit increasing? What was the situation? In fact, you may even want to find out by what were the proportions the same. As you increased the sales, did the gross margin or the gross profit increase by the same level? The other thing is you might start finding things that have happened. That, for instance, the prices you are selling at maybe are not generating you enough gross profit. So this is the time to know. This is the time to find out. Okay, the other things that you could have done in your business in the first half of the year is you could have changed what you're selling. That means the product mix or the types of services that you are providing, you may have changed because you saw opportunity. So those changes that you've made in your business have definitely got an impact on your gross profit. So what is the impact? So that is why by the middle of the year, it's an opportune time. It's just the time, the right time to review what has happened to your gross profit margin. So those are the reasons why we need to do your review, or you have got a very good opportunity to review what has happened to your gross margin in this time, by this time in the middle of the year.
Thank you, Patrick. And
Welcome.
we have a question, and also apologies. Share with us, how is the live coming out on your end?
Yes.
I have noticed a few, it's resuming and coming back. So share with us if you've seen any interruptions, so that we can be able to also get your feedback. How are you seeing this live on your end? Is it clear? Is it coming in? Is it audible?
Yeah.
Yes. So we have a question. How has your business become more or less profitable this year?
Good.
Has your business become more or less profitable this year? And what do you think has contributed the most? Tell us in the comments, tell us in the chat, and we are going to engage with you. We are going to give you practical advice, and you're going to do the best in your business.
Yes.
Yes.
Those kinds of questions are good to ask yourself.
Mm-hmm.
Has your business increased or decreased the gross profit this year? As of now, what is the situation? You need to challenge yourself with those questions, because you are going to end up better off. You are going to manage your business better. So let's go back in time, say to the beginning of the year. You had a plan for how much profit you want to make this year. So that kind of plan is what I am hoping you did. Maybe it was written, maybe it wasn't written. So, but there was some idea how much profit you want to make this year, because you had reasons to want to make profit. All businesses need to make profit so that they can grow, so that you can pay for more stock, you can buy more stock, you can invest in more assets like equipment and so on, and you can get a bigger market share. So that plan is the gross profit plan. The plan you set out with, that I intend to make this amount of profit during 2026. That is what the gross profit plan is. So if you did, then the question is straight. Have you made the profit you expected? Is the business generating the kind of profit that you want it to? All right. Is that profit of a certain amount that you can cover the expenses that need to be covered, especially the fixed expenses? Every business has got some fixed expenses. This is also called fixed costs. These are the expenses that you need to pay this regardless of how many sales you're making, like rent. Rent is fixed, not that it is so much fixed amount. Yes, usually it's fixed amount for the year per month, but it's not. The fixed doesn't mean it is really fixed, but it is a permanent. It is a permanent expense. That's what we mean by the fixed cost. It's permanent, whether or not you are making the sales that you intend to do, or whether or not you have had to close your business to attend to something else, which I would hope you haven't had to do that. So the fixed expenses have to be paid by the gross profit that you have generated. So one of the reasons why you must have been thinking about the profit that you want to make is so that you have enough money to pay those fixed expenses. So that plan, remember, that is a good plan to have. There's other plans that we talk about, other business plans. So this is the plan that we're talking about specifically. The plan that you had in mind or on paper or on your screen as to how much profit you
At 4%. It is charging, but it keeps dropping. It's the green, but it is just dropping and dropping.
Okay. Let's just see. Is that better?
Let's see if
You might
it
need to look at
checks.
this.
Okay.
Good.
Yes.
Okay. That has been checked out. We are on to the next area of our conversation today. We always have these conversations every 2 weeks. We have this video, we shoot a video, and we share what we need to share, what we would like small businesses, particularly small businesses, to understand about their businesses so they make their business better. So let me introduce a way that you can review your gross profit plan. Assuming, and I'm hoping that you had that plan, whether it was in mind or written, here's a suggestion as to how you should go about reviewing or evaluating how you have performed on your gross profit. One, has your gross profit been achieved? I'm assuming you knew how much gross profit per month. Has it been achieved this month, the previous month, June, or even for the whole of the 6 months, or even for 2 of those months? Depends on where you started planning about your gross profit. Has that level that you wanted been achieved? And whether the profit margins are increasing. Say if you checked May and you also checked June, or you also checked March, April, May, and June, has there been a trend of increasing or has it been declining? Then the other way to evaluate your gross profit is which are the products or the services that are generating that gross profit. Because some are making more gross profit than the others. So which ones are they? Which ones are they? And what is the situation? Are there some which are making much more, or some which are even making less, negative gross profit, that are somehow overlooked, but they're actually loss making? Depending on the selling price that you're selling at, they are actually less. You're selling at less than the cost, how much it costs you. So this is what we're talking about today. Reviewing, there can be some improvement. So we have a question, you said?
No, there's no question from their side.
Yeah.
But we have a question from our end.
Yes.
Which do you review more often? Is it your sales? Is it your gross profit? Or is it both or neither of them? So between sales and gross profit, which do you review more often? And another question to you: Did you write down a gross profit plan when we were starting? Just from January to now, have you had a gross profit plan working for you? So we're going to look at the steps in comparing the gross profit performance against the expectation. So we are comparing what is already there, what we have seen, and what we had written down. So Patrick, you can give
Yes.
us the key areas.
So let's assume there was a gap
Yes.
between your gross profit and what you had planned to achieve, the gross profit you had planned to achieve. The next step is to find out what is the reason, what is the root cause. Once you know the root cause, then you will be settled. But not only just settled to be satisfied, but settled that you have a way of changing the situation. You have a way of turning around the situation so it can be better, or even you can take advantage of what you're seeing, the situation that you're seeing, and make it even better. Maybe good, but you may have a chance now to make it even better so that you can excel, you can exceed the expectations that you set. So the root cause is the next step.
Yes.
The root cause helps you to be ready now to take action. So let me also add that the more you are answering these questions and finding the backgrounds, the causes, the more you are empowered, you're feeling empowered to improve your business. So if you already have seen there is that gap, the next question is why? What are the root causes? Because once you know the root cause, you will be in a better position to take action. So don't stop there. Find out the root cause. Because as you find the root cause, you can see that, oh, yes, you have a chance. You know you can change this. So you're better off. So keep going. Keep finding out. Okay. Let's say that the sales are increasing, but gross profit is staying the same. Again, what are the causes? It gives you an ability to find out. Find that you're selling, yes, but the costs of those sales have increased so much. The fixed cost or the buying price of whatever you're selling has increased so much that at that price, your margin is less. So your gross profit is actually less. So you are ending up with less gross profit, and that issue of if it is the cost of the goods sold which has increased that much, it gives you a chance. Do you now negotiate for a lower buying price from your supplier? Do you use methods of delivering that service which are cheaper so that you can, at the end of the day, you can have more gross profit? So all this is getting you prepared to take action during the second half of the year. Remember, the second half of the year, you're still at the beginning. We're still early in July, and things may not be so busy right now. This might be the right time to take actions and to evaluate what action you will take. Okay, also direct costs. Maybe you are using an electricity for delivering the service. Maybe you need electricity in your business to make a service, to deliver a service. So maybe a direct cost in that case is the electricity. Electricity is a direct cost. So maybe that electricity cost has gone up. So it gives you a chance to see, oh, I see. By how much has it gone up? It would have increased maybe twice, maybe 1.5 times. So you start seeing that no, you cannot deliver this service at the same price because the electricity cost has gone so much higher. And the electricity price influences your ability to deliver that service. So the action would be, now I know that it's the electricity, can I adjust the price upwards for this service? The other thing about that gap is it gives you a chance. You know the gap is there, gives you a chance at this stage to find out which are the products which are contributing to this gap. This gap of which is of either of underperformance, below performance. Which are the products? Which are the services which are making you end up with less gross profit? So you start seeing, yes, there's a range of products that are not making so much now. Then you start going further. What is the cause? It could be the market is changing. Could be that cause is customers want to pay less because there is a competitor who is charging less. So with that information in mind, you can take action. You can take action. Do you adjust to compete with that person, or do you add more value to your service so that you can continue to sell at that price you're selling and maybe get more customers in, or maybe get more people buying from you because they can see, yes, you have an added service or added value that the competition does not have. So all the information that you get is valuable. That's what I'm saying. All the information is valuable because you can take steps which make you either get back on track or even exceed your expectations. So that is how you systematically find out what is happening to your gross profit, and you find the cause, and then you act on the cause.
Yes. Have you ever found that one of your best selling products actually makes very little profit? Have you ever found that one of your best selling products actually makes very little profit? Or your service, if you're not selling products, you're selling a service, you offer it a service. So, have you found that? Share with us in the live chat and we'll engage back. If you have questions, if you have thoughts, if you have something you would like to share with us, use the live chat and we are going to appreciate. We are going to cover the next part, which is understanding the causes behind the results. Why are we above the target, or are we below, or are we on track when it comes to gross profit?
Yes, we are already we've already identified the causes. So the next step is actually the actions that you will take. So the actions that you will take are the ones that will help you get back on track, or will help you exceed the expectations, or will help you steer the business to a profitable end of the year, so that at the end of the year, you have generated more of the profit that you had hoped to get. Okay, so it could be that the cause of your other ones which are causing that gross profit to be less than what you would want. So the answer is discontinue discounts, stop discounts, or give discounts of a different style, a different type of discount, like a quantitative discount instead of a cash discount, or give a discount only when a certain level of sales has been achieved, or give a free gift, that replaces the discount. So a free gift that is something that it could be a notepad, could be a key holder, it could be a cap like mine, it could be something that keeps the customer happy but does not reduce your gross profit margin or even the actual gross profit. So it's time to take some action. If that discounts were the issue, you could change your whole strategy instead of a discount strategy. So the other thing is pricing. Pricing is something that you need to relook at. Are you selling at the price that actually enables your business to return a profit? This could be time to do a fresh pricing of your fresh costing of your product or your services, what are the actual costs? Because maybe you've lost touch with the cost of producing certain service, or maybe costs could have become more favorable if you're buying a bigger quantity of a certain input. So this is the time to review your costing so that you can adjust the prices, and the prices may be more favorable to customers or to you and your business customers, or you may actually be able to achieve a bit more, a higher price, which gives you a higher gross profit. So price is something that is in your control. It is more in your control over some certain products than others. There are some certain products which even the price list is fixed, or they're such in a way that you can't. There are those products that you can't have flexibility on price. We call them the commodities. But then there are those products where it's a specialty product where you can actually adjust the price. Maybe it's something that you sell, and that is to a higher income kind of customer. So you can say that yes, our price may look higher, which you might more things like the comfort, the experience in your business is a different level. It's a higher level. So they will actually feel that that's all right. They can pay a higher price to your business because of the level of comfort they get in your business, or the level of service that you give. The level of service is personalized. You get even an appointment to come in. You get somebody to meet you. You don't have to wait. Somebody to meet you, somebody to take you straight to where you get your service, the seat, or whatever it is, the things that you normally buy. They're all there prepared for you. Those are the kind of things that can help you adjust the price. The other thing is, one of the reasons could have been, and I mentioned earlier, your products have changed.
Yes.
Since the beginning of the year. You've adopted another range of stock items. So this is time to also review and study what is the impact on the gross profit of those new products you're now dealing with, or new services that you are providing. That information will give you information, or data will give you data that helps you to understand, oh yes, I made the right decision to introduce this new line of products or these new services. So once you have that information, you can take that step. Take the step of, in fact, increasing the services in that direction, that range, or selling the products in that range, and even finding out what do the customers who prefer that product or that service, what else do they like. So it gives you some opportunity to go deeper and expand on that new range of products. The other way is that the product mix could have changed because there are some products that you can no longer sell. They're no longer profitable, or they're even getting out of date or out of fashion. No one is interested in them. So you start moving them out. You start reducing your stock. We call it clearance. Clearance. You do a clearance sale. You get the sales cash that you could have got, and apply that cash to buying a different or a new range of products. So these are some of the ways you act. Having known the gap, having known the causes, now taking the actions so that you can be on track to even, oh, I should also have mentioned total sales.
Yes.
The total sales could have, you're doing a lot more sales, and therefore at the end of the day you have much more gross profit. The money that results is a lot more. So what do you do if sales are declining and therefore you're not making enough gross profit? What you do is to find out how to increase your sales, Of course, you're going to increase sales on products which have market, have demand. So what strategies will you take to increase the sales of or to certain markets or to certain customers who give you, or who at the end of the day give you a better profit, better gross profit? So sales determines profit.
Yes.
So if the sales are the ones which are the cause, the sales are not enough, then take action to adjust or increase the sales so that at the end of the day you have a better gross profit. So those are the actions that you take, having found out the gap, having found out the cause, and now having having chosen a strategy that will help you to stay on track or to do even better than you did in the first half, or at least to achieve what you had hoped for by the end of the year in terms of profit, the gross profit that you make by the end of the year. Do we have another question?
Yes, we
Good.
have a question here. Which factor has affected your profit the most in this year?
Mm.
Which factor has affected your profits the most this year? Share with us. Is it cost of stock? That is also the direct cost. Is it pricing? Is it discounts? Or is it low sales? Which of these has affected your profits the most this year? Type in the live chat and we're going to engage back with you. Yes.
I want to mention a few more actions that you can take.
Mm-hmm.
Having known the gap and having known the causes,
Yes.
there is also another action you may choose to take, or you may find it's the most ideal to take.
Yes.
That is your inputs. If you can get the input, the stock, incoming stock at a better price by buying at a different amount, different quantity, you are able to negotiate for a lower input price or the lower cost of the in. So in short, you're not there's so many options that you can take. You're not out of options. That is another one.
Yes.
Also, yes, you can even discuss.
Mm-hmm.
You can even discuss not only even some of the fixed costs are negotiable.
Yes.
Yes, you could negotiate one of the input costs to be at a lower price to you because you are promising to buy a lot more, or you're promising to be a much more reliable customer. You pay on time, for instance, or you even pay cash with your supplies, cash on delivery. So make yourself or put yourself in a position to receive your inputs at a lower input cost or lower incoming stock price, and you will find that you can adjust your gross profit, increase it in ways that you need. Okay, one of the steps you might have to take is to be more realistic about the gross profit targets. If you had targets which have turned out to be unrealistic,
Yes.
then it might also be a good way to go to be more realistic. If you find that the gap is so big that there could be another problem, that it was probably, or it could have been unrealistic, it's also a good thing to adjust your gross profit to something that is achievable. So we never say that we can't adjust.
Mm-hmm.
We never say that. Maybe you are aiming for the sun, and maybe you can actually reach the moon.
Yes.
So maybe it's time to realize that aiming for the sun is probably not as achievable as reaching the moon. So don't forget, you can make yourself a more realistic gross profit margin And with that, you know you're dealing with an achievable figure. And with that, you know you can take some other steps which make you live within that achievable gross profit. Like for instance, not using the amount of fixed expenses that you have been used to. Maybe it's time to think about going online for your sales instead of expanding your premises, or instead of using the premises that cost you this amount of money in rent. Maybe it's time to, you don't need to pay rent for an online shop. So those are some of the things that might be very positive about you starting to be realistic about what is achievable. You might actually find that you were on a track that was inefficient. So maybe you need to be on a plan that is more efficient, that is, in fact, that can save you money so that you can live within that, achieving that gross profit that you have found is what is achievable. Yes. So,
Thank you, Patrick.
yep.
Thank you, Lindsay. I see you've given a compliment. You've left a compliment that
Thank you,
this.
Lindsay.
Yeah, she said this is a wonderful platform. So you're welcome. We usually have YouTube lives, and we'll continue to have these sessions from 3 p.m. to 4 p.m. on Tuesdays. Uh, in case of changes of the
We'll
day,
let you know.
we let you know through our announcements in the community, through our videos, and through our
Yes.
various shorts in our YouTube channel. If you have not yet subscribed, please subscribe. When we upload our videos and other business resources, you get notified.
Correct.
Yes, welcome to this platform, and let's learn together. Now,
We could also add that the more we interact, the more we generate content that is relevant to your
yes,
situation. So please, let's interact. Let's hear what is troubling, what is causing you not to achieve, or what you're aiming for. And let us see, send it to us. We will most likely look at what we have and maybe even create a video for that area, that topic. Because we are business improvement professionals. So over many years, we have accumulated quite a bit of knowledge on small business improvement, especially small businesses. We are passionate about small business improvement.
yes. Thank you, Patrick. So, Lindsay, you've heard from us, and everyone else who's watching, you've also heard from us. You need more information, you can ask us in the live chat.
Yes.
Now, what is one change you will make after today's discussion to improve your business profitability? After you leave this discussion today, what is one change you're going to make in your business to improve your business profitability? You may share with us, or you might choose to write down in your notebook, but make sure you write down something that you're going to change so that you can improve your business and your profitability. Now we're going to see, guide us in that.
Yes. Yes. We can't fail to mention systems, because systems is help that is available for you to deal with all the amount of data, all the situation, all the factors that are affecting your business. There are many factors that affect your business continuously, from staffing to stocking to issues like dead stock to issues like selling prices. There's so many, even financing, even the direct costs that we've talked about, even the indirect costs like interest, indirect costs like what it takes for you to get a permit to be allowed to run a business, things like permits and so on. So there are normally very many factors. And if you look at all those factors, remember, there's also your desires for your business. So in order for you to achieve your desires for your business, we always suggest that find easier ways. Find easier ways to process this data so that you can be able to see what it gives you, what recommendations it's giving you, and above all, what control it gives you. Control, if you are the owner of the business, you're the one who is investing the money, you need to be able to at least control some some areas of the business, if not all areas of the business. But you cannot realistically control all those areas at the same time if you don't have something that is helping you. That is why we advocate for systems, especially digital systems. We ourselves provide a digital system called BORESHABiZ. BORESHABiZ is able to process a lot of the data as you run your business and even make that the information available for you to see how that information is. What is the situation from the beginning of the day to the end of the day? What is the situation? What has changed? What has not changed? What are the ways, this data, what can you decide? And we even give you recommendations. So imagine having a processor or a system that is continuously understanding your data, but also processing and then also giving you suggestions, recommendations for improvement. That is what BORESHABiZ does. It's a small business solution to capture. The thing about BORESHABiZ is that it is crafted around the situation of a small business. That is a small business which produces a service, a small business that retails or wholesales items, stock items. Also, a small business that serves or delivers project work which takes days to create or to build. Project-based businesses, but also manufacturing type businesses. That is a business which produces a product. It could be a product that is a physical product like a cup of yogurt, or it produces something like furniture, produces window grills, fabricates steel, but also it produces a commodity like an agricultural commodity. So it produces a poultry product, a dairy product, or milk products, or milk by itself. So also value added types of businesses. Those are the manufacturing types of businesses. So what BORESHABiZ does, it works with your model, and that model of business, any of those types I've mentioned, it gives you the platform where you input the data and it has the calculations that it does with your data so that you see the end result, you see the data that you need to make decisions or to stay in control or to close loopholes that through which you're losing money, or to even answer you questions which are they're always there. Like for instance, I know small businesses who are having to input money. They're having to invest money too many times out of their pocket or out of their other sources of income. So they're wondering, where is this money? They keep on investing. We don't know where this money is. So BORESHABiZ is the kind of platform which answers that question so clearly for you. It's also the kind of platform which enables you to use or to apply the competences of your staff in a clever way that keeps them motivated. For instance, they want to do a sale. They want something that has a bit of technology. They don't want to have to write, this by hand, note paper, which is not, it's not clear where this note paper is coming from or where it's going. They want to do a digit in control of your financial accounts as well. It puts you in control of the data that you need to make decisions every day or every month. Like that profitability that we're talking about, the gross profit, you're able to see it at the time the month ends. That data is live. If it is at the end of the day, that data is live, it's available. So you're able to use that data immediately. So BORESHABiZ is available at web.boreshabiz.com. It's a web app, but also on your Play Store, you will search for BORESHABiZ and you'll find our app, mobile or web, and you will find that it is very cost effective compared to what it is saving for you, what it is giving you. It gives you a level of management, however small your business is, a level of management which is like empowering you to grow your business and achieve your dreams faster and more objectively. So, what are the key takeaways for today's video? The first one, sales and gross profit could be going in different directions. You could be having increasing sales but reducing gross profit. You need sales to generate the profits, but you also need gross profit to cover the expenses. So it's important to be able to not just track your sales, but also to track your gross profit. And the more you are clear on those figures, the more you can go further down and even generate or develop a plan for them, a sales plan and a gross profit plan. So today we were talking about the gross profit plan. We're talking about why middle of the year is a good time to evaluate where have you reached or how has the gross profit behaved, where does it sit this year at this middle part of the year, so that you can make some decisions that help you achieve more of the gross profit, or even just to achieve the goal or to exceed the goal you had set out. So, how to compare your actual performance with what you had planned, your actual gross profit achievement with what you had planned, to identify the gap. The gap needs another step, and that is the causes of that gap. And once you have the causes, you're able to make some decisions. You compare the options of decisions that you can make and make the decision. We said there are decisions which increase. All of them are to help your business do better or to help your business avoid more areas that it loses or areas that it is worse off. So eliminate more of the areas that drain your business and increase more of the activities that improve your business performance, especially from the point of view of gross profit. We also talked about practical adjustments that you can make. We gave a variety of practical steps you can make. Some of them you may not have done them. You may not have negotiated for lower discounts because you're ready to sell more or to buy more of the input. So that could be something. Or you're ready to reduce the expense on a certain area by, for instance, going online, selling or opening into a market which is maybe more cost effective. Maybe online, for instance, is more cost effective, no rent and things like that, no staffing. Some of these are automated. E-commerce is very automated actually. So you don't need somebody on the keyboard all the time or in the office or in the shop all the time to run your e-commerce platform. So we're here to help. We've mentioned a process that is objective. If you hadn't started planning to achieve a certain gross profit, it's time to do that, because profit is what you need to pay for expenses, okay, and to keep your business viable. Your business needs to be viable. If it is selling without gross profit, it is not viable. It runs the risk of closing shop. So that was what we hoped. Plan, evaluate, that is compare.
Yes.
If you know the gap, you found the gap, then you can take steps. If you did not plan, it's hard to know the gap. If you did not look at the gap, it's hard to take the next step to find out what is causing things to go that way. And then if you don't know what is causing, you can't take the steps.
Yes.
So we want you to follow a structure like that, so that your business can continuously grow from strength to strength. And we do want your business to grow. Remember, your business is not just a hobby. This is a lifetime. It's a lifetime. This is your source of income. This is not only your own source of income, but for generations to come. Look at it that way. Give it that level of seriousness, and it will start paying you back from an early stage, to start giving you satisfaction that is going in a serious direction. And generations to come will find that you have truly created a business that they could not, first of all, have created. And maybe that job is the one that they needed for them to find work. It is not easy to find work. But if you create a business that generations to come find employment, they work in that business, they go study and come and apply their studies or their qualifications and their competencies into a business that exists, how wonderful that would be. So that is it for today. We want to tell you that we have another one planned for you, the next one on stock management. We have a lot of businesses that manage stock. That is stock that they sell as it is, as like the retailers do, or wholesalers, distributors, but also stock of inputs that are used in the service that they create or in the product that they produce. So join us 2 weeks away. We shall discuss
Stock management performance, the review of stock management performance, and we're going to see what we can do to adjust for the rest of 2026. So that will be 21st of July.
the 21st of July. It's a Tuesday.
It's a Tuesday from 3 p.m.
Yes.
to 4 p.m. We have also covered reviewing of sales. It's in our videos. It's the latest video. Click on it, watch the full video. Because you have mentioned sales performance, you can watch that video so that when you finish watching, you can connect that information to what you have covered today, and you'll have very good content and very good information to improve your business. All right. So that has been today. Thank you for joining us, and thank you for engaging with us. For everyone who's engaged,
Thank you.
see you in the next
See you in the
section.
next one.